Foundation for Economic Growth and Welfare is a research-based policy body and believes in research-based policy advice to the government and to other stakeholders. Because we are so much concerned with research-based policy, in the last 2 years, we have invited experts from India and abroad to speak on contemporary policy-related issues. We have been very fortunate and we have maintained a mix of 50% foreigners and 50% Indians on talking on various issues ranging from monetary, fiscal, and socio-economic indicators. We have also invited academic research related to policy. We have had the privilege of having speakers who have won a Nobel Prize, professors from Harvard, Columbia, Berkeley, Stanford. We have also had practitioners from across the world speaking to us. The month of July and August, we are dedicating to India Vision 2047 because the Prime Minister has been talking about this. Last two sessions were on the insurance 2047, non-banking companies 2047. Today, we are focusing on banking in 2047. Next week, we will be focusing on financial sector reforms, then on trade, then on climate, policy-related issues that are very dear to the policymakers and the government in our country. It is in that very context that we have invited a panel of experts from the public sector and the private sector to speak to us today, Indian banking system in 2047. To chair the session today, we are especially privileged to have Mr. Mahapatra, who was the CMD and who has had a long career in banking. And I have had a privilege to interact with him, not only as a banker, but something beyond a banker, as a person, as a CMD who had brought in IT into the banking sector. Knowing his skills, knowing his knowledge base, and knowing the learning that he has, that he shares with us, we requested him to chair the session. To take the proceedings further, I now hand over the session to Mr. Mahapatra to conduct the proceedings.
Thank you, sir. Once again, apologizing for the delay. Dr. Singh, it is always a great privilege to be associated with you, your foundation, and your activities. There's no gain saying that you, along with your academic, industrial, and knowledge sharing kind of activities, you are bringing the much needed platforms to make India more enlightened. Because there's this saying, knowledge economy thrives on events like this and platforms like this. Thank you very much for the opportunity. Because we have lost about 10 minutes for my faults, I think we will straight away proceed to the event. For the panelists, I think we know that those of you who have read the flyers, we have Mr. Krishnan, who was a distinguished CEO himself, who is a change leader, who has orchestrated many things in the banking world. We have Mr. Shekhar Bhandari, who passion own sphere of excellence into it. We have Siddhartha Sanyal, who is from Bandhan Bank, and his research efforts are well known. I don't know whether Soumyakanti is there.
So Soumya probably will join at the fag end if he can. There was some medical thing, so he had to quickly leave.
No problem. So Soumya is, of course, somebody with whom I have worked for a long time, right from the day that he joined SBI from some other place. So today, for the audience, we are doing a little bit of crystal ball gazing, if you may. 25 years back, as I think Dr. Singh was mentioning, some of the things that we are seeing today were completely unimaginable. So 2047, which is 25 years from now, when we are sitting down or putting together our thoughts in terms of understanding how the banking will look like in 2047, I believe following the famous academic research methodology, we will have to take what it was 25 years back and what it is today, what we are seeing. From that, we try to make some amount of hypothesis as to what it will be like in 2047. So to set the context, I have put some kind of a structure to this discussion. And for the audience, I have shared it with the panelists. What we will do is that initially I will set the context for maybe 4 or 5 minutes. After that, individually, I will hand it over to my esteemed co-panelists, and they will speak out their mind as to what they think could be the shape of banking. Also, banking, as someone was mentioning a little while ago, banking as an umbrella, taking inside it bankings, non-banks, non-banks, the fintech companies, the people who are likely to be plugins to the banking system, and project for ourselves something so that the ecosystem and as leaders and opinion makers, all of you, the esteemed audience, will have some idea as to how we can move forward. Now, what the banking was in 2025, when I'm speaking of 25 years back, when I'm speaking of that, my mind goes back to, let us say, 96 to 98, midpoint being 1997. There was no core banking. None of the banks of any bank, except probably some single product organizations like Air India, who were doing some amount of ticketing on a network ticketing system. None of the banks were connected to core banking. Individual computerization was being touted as some of the leading initiatives. In fact, I remember my days in State Bank of India when we were doing individual branch computerization. Let us look at the profile of the risk management. Risk management was not a separate discipline. It was embedded in different spheres. Some of us were doing risk management, were doing credit appraisal. Some of us were doing, but risk management as a separate, distinct, and specialized discipline was absent in the Indian banking system. And income recognition and asset classification, which came formally somewhere in the early 90s, and the Narsimhan Committee and the induction of private banks. Please take your mind back during that time. Again, the recognition of income was also fledgling. And at the same time, all that we were seeing in the treasury area, because the stock markets were again recovering from the 1992 shock that came from Harshad Mehta, stock markets were getting galvanized, trading system, National Stock Exchange was not yet there. So the financial system, trading system, payment system, everything was in a state which is unimaginable even today, that we were at such rudimentary state. What we are looking today is not just the disruption that is unleashed by what we call the modern people body as SMAC, social media, mobility, analytics, and cloud. That is a given. Everybody understands. but changes are happening in the people structure of the players. New millennial players are coming in who are bringing new aspirations. New startups are coming who are defining the system. New international global players who want to have a share of India and other developed markets. They are making penetration as their main strategy. There is no caring about the cost and return on investments. Angel investors and investors who are willing to bet their money for a success rate of probably 1% is propelling the fintech system to a new drive. So what we are looking that probably at this moment in time, the monolithic banking is getting completely redefined as a microservices based banking. And banks which were constructed as people or as an organization who take deposits to give loans and on the side doing some remittance and advisory are getting redefined as in the bank 4.0 book by Red King says that banks will no more will be custodians of data and will be peddlers of experience and differentiated kind of products which will not last for a long time. So with this in background, predicting 25 years, I leave it. What will happen? I will listen more to the panelists. Probably when I sum up, I will try to give some idea. So first, I think we will go to Mr. Krishnan. And Mr. Krishnan, based on your experience, and as I set the context, what you have seen in various areas, what is your idea of banking in 2047? Mr. Krishnan, please.
Thank you, sir. I thank EGROW Foundation and Dr. Charan Singh for inviting me to this. The chair of the session has rightly set the tone. Predicting anything 25 years now, probably one has to look into where we were and what we were and how we have moved, how the journey was, and what is expected to be. Yes, very well briefed as to what it was 25 years back, where the banks were not having even any CBS. I also recollect, as Mr. Mahapatra was telling, that those are the days when the manual banking was taking place and the ALPM came in, and then the TBC, then the CBS, and so on and so forth. Now, when we look into today, how where the bank has come, and it totally depends on the technology. If there is no technology, the banking will be very, very difficult. That is the day today. Now, going forward, taking a cue from our journey of past 25 years, I feel that the economy definitely is going to be an open economy in the days to come. When it is going to be an open economy, yes, the banks play a vital role in the economy. I recollect the saying of a scholar who says that 19th century was of a dependence, 20th century of independence, and 21st century is going to be interdependence. When that being the case, there needs to be an interdependent. There will be interdependence amongst the country. There will be interdependence amongst the institutions. Now, when we look into the banking and the growth, now, yes, thanks to the Government of India, who has now set up a separate development financial institution, NAPFID, which will be taking off very shortly. Otherwise, the lessons what we learned earlier, also when we look into the commercial banks lending for high infrastructure and other things, now there will be a separate one who will be taking care of these large projects. When I look into the banks, do the banks of India are large to be of global size? How many of that we have? What are the other countries which have large number of big banks? If you look into, India has a very, very small number of banks which are of global size in the world rank. So there is an urgent need to have a large banks of, say, for example, I can quote a State Bank of India. We need at least for 5 SBIs in the country to in the days to handle the banking in the years to come. But having said, whether the banking will be depending only on the large banks by 2047, my answer will be no, definitely not. The small banks also have a very, very important role. They will be playing important role because the country is diverse and there is a need for inclusive banking. These small banks, probably maybe by way of a regional banks, they will be playing a vital role. They will be able to reach the last mile like NBFCs. So when I touch upon the NBFCs, yes, there is a need. That is what I said, there will be interdependence. Probably to move towards, there is now co-lending has been permitted. There will be interdependence amongst the banks and the NBFCs. Now, if we look further, there are P2Ps permitted by Reserve Bank of India, started. There are a lot of payment banks. There are a lot of small finance banks. Now, what is required? There will be interdependence. There will be a lot of fintechs which are coming. Hence, there has to be a collaboration amongst the banks. Just before starting, we have the off-the-line discussion with Dr. Charan Singh and Mr. Shekhar, where Shekhar was very correctly telling that the line of differentiation between the bank and NBFC will be very, very thin in the years to come. Yes. But going to achieve that, what is required in our country is that, in my opinion, there will be an enhanced regulation and supervision in respect of these players, still they get stabilized. In as much as most of the parts of the country is of the rural areas, and these NBFCs are able to reach those segment, and hence there is a need for a regulated supervised entities. Still they get stabilized. That is what I have to say. And technology, yes, as I said, without technology nothing can be. Already the banks have now every type of technology. The fintech, they decide as to what it should be. With the collaboration, we will be able to take it forward. So 2047, what I expect is the banking will be broadly, as there will be a large banks in the country to take care of the large infrastructure or the country's trade and payment settlement and other things, who can play in the world global market. There will be regional banks which are of small banks, and they will be having collaboration with the NBFCs or other segments like the fintech companies, which will be playing a major role. So I stop here and will be again coming in as and when the chair says.
Thank you, Mr. Krishnan. I think I'll come to you, Siddharth, before I go to the other practitioner on the panel, Shekhar. Siddharth, as you know, the development in the banking has a direct correlation with the evolution as well as shifts in the economy, in the microeconomy, and whatever we have seen in the last 25 years closely corresponds to the evolution of India as a society, the aspiration of the middle class, the shift to liberalization and privatization. But at the same time, we are getting voices, I think, like what Ms. Satwal, who is on the board of Team Lead, board of RBI, as also the founder of Team Lead, says India is suffering from underbanking and under-urbanization. And so what in your research you're finding as indicators and pointers to banking in 2047? Especially in the context of whether these services will be fragmented, they will be granularized, and whether banks as such will be purveyors of service, whatever may be the size. Yeah, Siddharth, please.
Thank you very much, sir, for your question. That actually you structured the question in such a way that possibly helps one to think about the answer and structure the answer. So thanks very much for that, sir. And before I say anything, thanks to Dr. Charan Singh and to EGROW for this particular opportunity. The topic is fascinating. One would like to take a stab at the future, that how exactly Indian banking can look like. Though I just said Indian banking, my sense is that it's possibly better to
better to speak only about banking rather than trying to all the time say Indian banking, because my sense is that we'll possibly be far more integrated with the global economy, both not only in the banking sphere but also in the economy as a whole. And Mr. Mahapatra, as you rightly mentioned, that very clearly, sir, the evolution of banking in one particular country will also be mirroring the developments in that particular economy. Now, if the economy is more inward focused, had we been focusing more on some of the goods and services that we consume within the domestic periphery of the economy rather than being more global in nature, possibly the internationalization of the banking would have been far less. But in Indian context, as things look like, most probably our integration with the global system will be far more going ahead over the next 25 years than what we foresee now. Sir, I like very much the way you initiated the discussion that if we need to focus on 2047, then possibly first we need to go back by 25 years. My sense is that with your permission, I'll possibly take it further a little more. That today what we are seeing, that for everything, be it science and technology, be it banking technology, be it our emotional attachment with one particular thing that we like and love today, generally the cycles are getting shorter. That means the distance that we covered in last 25 years possibly will be covering that distance not in the next 25 years, possibly in the next 15 years, or maybe even quicker. So possibly, while that is a fantastic starting point to talk about the next 25 years, we should go back at least 25 years. My sense is that we can even go back by 35 or 40 years, why 25 years? Now, if I see that, a few things that stand out at that point of time, and in case of some of the financial variables, very important factor is relative growth of the domestic economy vis-a-vis the global economy and bigger economies, relative inflation differential, interest rate differential. Now, what we get to see very clearly, those differentials have come down dramatically. So it's very difficult to imagine even or recollect the past, say 30 years back, our, say, a 10-year government bond yield was possibly double the level compared to, say, today's 7% or 8% that used to be in the mid-teens at that point of time. Going ahead, there is every possibility, and the way we are focusing and institutionalizing certain policy initiatives, there is every possibility that we will possibly be having a much better anchor on inflation, India's inflation differential, deficit differential, interest rate differential will be far less compared to the major economies in the world. One very stunning corollary of that can be that while at this moment today we think that over the long term Indian currency against global currencies can only continue to depreciate at a rate, say 3%, 4% or 5% kind of on an average every year, there is no sign that it won't happen over the course of the next few years. But at some point of time, we will possibly talk about a much slower pace of movement, even in case of Indian currency. So basically, the currency at some point of time, I don't know when, maybe 15 years down the line, maybe 20 years down the line, might start acting very stable from that point onwards. The interest rate differential, if the interest rates are if the currency is very stable, if the interest rates are much better aligned with the global big economies, then de facto we are talking about a far freer and far stronger movement of capital account items automatically, and providing possibly the path for stronger internationalization of the economy as well as of the currency. So I'll possibly not go for very long in the initial phase of the discussion and might come back if there is another opportunity later on. But big takeaway is that very clearly we will have an economy and a number of economic entities, including large banks, which are far more internationalized, far more integrated, and we will be, this particular service segment will be far more integrated in the global value chain rather than thinking all the time about Indian banks. So I think that's where we are heading towards, and maybe we won't have to wait even 25 years to reach get a more convincing glimpse of that picture. We might have don't have to won't have to wait even 25 years. It might happen even earlier.
Thank you. Thank you. I think, Siddharth, one takeaway from what you have articulated so ably is that probably speed will be of essence. Preparedness to tackle the speed will determine the difference between men and boys. And also at the same time, what you're telling, probably the globalization or the induction of technology, everything will happen at a speed that is never seen before. So probably we will have to talk of 25 years and probably imagine for 50 years. Something like that you have been telling. So let me come back to you, come to you, Shekhar. Shekhar, you have seen both as a personal passion as well as part of your role, digital disrupting every uh, facet of banking. But uh, as you give your introductory remarks, I how digitization and digital disruption, which essentially started with internal productivity and has gone to the retail segment. Are we seeing corporate? Are we seeing agri? Are we seeing other B2B and banks as a whole collaborating, getting impacted by digital? As well as, what is your take as digital being the power of one, defining the corporate strategy going into the future? May I request you? You can speak of other things, but this is some curiosity that I have to listen from you. Yeah, over to you.
I think thank you, Mr. Mahapatra, and thank you, Mr. Singh. I think for being over here. Just directly coming to the question, we all like statistics, and I'll say that the number of digital transactions in terms of value, which used to happen in 20 years back, was around 8%. The way we stand today, I think it has moved to 40%, which means total around USD 3 trillion in terms of the entire part. And whether it is, and the reasoning for that, I think in my mind, 8 to 40% alcohol is the way the environment got changed, the way the government policy got changed or promoted digitization, race to zero, which was happening in terms of zero MDR charges and etc. The way the UPI as an instrument came into the function, and the way the digitize happened, and payment led the world called digitization with process efficiencies, and as we move forward, I guess it gets complemented with technologies, APIs, fintech, cashless. I think our things on account aggregators, the new age users, and then resulting further. I think if I were to paint 2047 and etc., I generally feel that 40% now will double from here, and much faster. I think cash economy still, I assume, will be around 10%, with, I think, technology consolidation, familiarity by users and etc. denoting the entire piece. What does it mean that everything which has happened with respect to new and emerging technologies, and which has been at various stages of implementations, actually has made paper to digital, be it trade, be it cash, or be it, I think, everything which we do with liquidity. We have seen the world and India largely to move to digital economy. We were talking of exchange rate, and I generally see that as you move to digital, I think, and India's prowess being significantly higher, we have an edge as a country as we march 10 years from now and 20 years from now to probably have a better say in the currency world vis-a-vis what it is now. It will also be a resultant of the economy we will be, or the size we will have in 2047. I'm sensitive of the entire theory that you need to be a critical mass for you to be relevant. And when India, the way it was relevant, probably we call it, I think, 300 years back, and coming back with a simple growth and compounding of 6.5 to 8.5, if I were to apply between next 10 years, and then I think further, you will see India as a part of, I think, top 2 economies. And when you have a top 2 economies constituting more than 1/5 of the world, which is possible, your currency becomes important, and your currency, when it is done very well from on the digital side, equally well, managed well, it can become a good part. Coming back to the point which you raised in terms of collaboration, and especially with respect to the banking collaborations and the way we all put together, act, behave, and etc. I can tell you, I think what we have done in last probably 40, 45 odd months is significantly better than I think what we did probably in probably 25 odd years. And why do I say that? Thanks to, again, the digital framework, I think common arenas of sharing data, common arenas of ensuring that we are not able to play against each other, but work together, especially against fraudsters, people who want to take advantage of the banking system. We were actually able to do a very, very good job. We took it further in development of the entire system, be it the payment system. I think NPCI is a collaboration of all the bankers. You will find even, I think, the new institutions of ONDCs, of CCI, of CCIs, of blockchain infrastructure company, all becoming an aggregate of the collaboration which has happened between banks. When you have SWIFT and the entire way, even we want to settle our trades, I call as a classic case of collaboration. 2047, I think, just if I were to paint a bit more, I'll assume that you will have a customer who is more educated, a customer who has more money, and I'm saying it is across India, not I think getting one or two. You will have a customer which has controls their data, because by that time I expect the data and the data controls to be in place. A digital currency which will be functioning very, very efficiently, and the customers able to choose between digital and the physical part. Globalization, I think, across the globe, and we realizing that you cannot take either the customer for granted, the lender for granted, or the customer, or I think all the partners in the ecosystem. And even you can't take government and the regulator for granted. So I generally feel when the transparency is high, the data is known to everyone, the analytics engines are working at its best, the big data and ML structures work very, very efficiently. You will have collaboration as a basic theme, all the banks to come together and work not only with banks, but with all the financial partners. And as I was sharing, I think some part earlier, I think Mr. Krishnan did, I think, touch upon that, whether it is banks, whether it is NBFCs or a fintechs or other finance partners, I think the things will blur between them, because ultimately we will be catering to a customer and a customer need. There are few needs which banks will meet. There are few banks needs which NBFC will meet. There are few needs which probably a fintech will meet, and they will be well regulated by the various regulators to ensure that the customer interests are taken care of, are very, very well protected. With this prime is where I feel that banks who traditionally used to be taking deposits and lending and providing the entire monetary stability or to the countries, I think their responsibilities only will rise as we move forward, because they will be the custodians of physical currency, digital currency, and which the central government will generally would like to monitor for the country stability. I think 25 years is going to be rightfully, I think, a good period. Siddharth, I think, covered that because I know, I think, what has happened in, I think, how the transformation have been. I generally correlate that it took what, around 68 years for the first 50 million customers to have the aeroplane or I think aeroplane in. The automobiles, the cars which we drive, I think made it from 68 to 62 years, which means it took 62 years to get the first 50 million customers. Telephone, I think, took almost 50 odd years. Television, around 22 years. Mobile, I think, 12 years. So aeroplane, which took 68 years, mobile took almost 12 years to get the first 50 million customers, I think, across. You come to the new world, I think, which is, I called it post 2000. And I call it, I think, 23 years is where I think 20 to 23 years we are in. Facebook took almost only 3 years to get the first 50 million customers. Twitter took 2 years. Pokemon Go, I generally call, took 19 days. And Arogya Setu, our own, which is the own record, took 13 days to have the first 50 million customers. And that is the power, I think, at which the world, the technology, the digitization moves, and your data analytics, controls, everything has to move in tandem to make and cater to these aspects. I think digitization is changing the way we think, the way we act. It's a new normal, which I call as a never normal world. And in the never normal world, anything which used to be functioning as per the set standards earlier, I think becomes very, very dynamic now.
Thank you. Thank you. I think you rightly told that what we used to famously know about the computing power exponentially increasing through Moore's law is coming to be true of every aspect of life. And every aspect of life, as they say, in 25 years from now, banking will definitely be required, but banks may not be required. So because that all will get split. So that takes me back to Siddhartha again. Siddhartha, in your research, look at these asymmetrical growths happening. Speed coming at a blinding way. Ecosystem many times getting broken because it is not prepared for the speed. Regulators are not moving. Aspiration gaps need to be managed, so that requires policy interventions which sometimes have to get to the escape velocity from the traditional way that policy making is done. So what is your research? Where exactly we will be seeing as what I call the dichotomies and as well as divisions as well as disruptions? Because the system, as you told in your first page of interaction, will be moving at a blinding speed.
Right.
Now, if the brakes are not ready, and if the steering wheel is not ready, and if the body of the car will disintegrate at such high speeds, then where do you go? How do you manage this? What your research indicates?
Sir, that is really a key question, if not the key question. That if as we commonly call inside the bank business, if business move at breakneck pace, what are the control mechanisms? What are the infrastructure, system, procedure, infrastructure that we put in place? Thankfully, what we get to see that every bank, every financial institution these days are well aware and they're focusing very significantly on this particular aspect. Nobody wants to grow at a pace which might be unmanageable or risky, or even the regulators will not really will be kind with them for the slightest interval at this juncture. Be it here in this particular country or in any part of the world today. So the regulatory mechanisms also, as we have seen with the various Basel norms and various versions of the Basel norms on the lending side and so many things gradually, they are also getting internationalized and standardized across countries and across geographies. Now, my sense is that At this moment, we have seen, if I again talk about the Basel norms, they're possibly more on the lending side, to some extent risk management side. Now risk management will possibly have many other features and facets going ahead, that how exactly you control digital transaction risk management, how exactly you will have data protection risk management, that kind of norms will possibly be in place. I don't envisage it happening in the next 25 years. I possibly envisage it happening definitely in the next 5 years in a much robust way. That how exactly globally there can be some standard templates at least towards which every country will eventually be trying to move. Because these transactions are very much global in nature, and if there is a leakage or vulnerability in case of one particular country, that actually eventually gets the other countries, which is so perceived to be a more developed and a more strong country, that might also get exposed in some way or other. So I think that particular integration is also on its way, can possibly surprise us how quickly it can come. The other particular factor, slightly deviating, but my sense is that even as a finance fraternity, globally banks are, with all the new ESG norms and all, people are getting more cognizant about environmental responsibilities. So whatever focus banks might be having in their funding activities, or maybe in case of some of the other activities, because banks' role, as some of us just discussed in the last few minutes, that may not be limited only to providing some cash credit and term loans and stuff like that. It will possibly be helping a lot of customers and to help manage the day-to-day volatility in financial markets. So, for example, earlier, say, even in a small, while dealing with a small-scale firm, possibly a bank was possibly giving only some amount of loan and considering how they can actually recover that particular loan of theirs. Now, if someone tries to stay, focused to that extent only, that loan may not remain safe, just because some other vulnerability and financial market vulnerability might come and hit that particular customer in a very, very indirect way, but the basic viability of the customer might actually be impacted. So today, a small business get impacted a lot more by, say, commodity market volatility, currency volatility, interest rate volatility, and as a bank and financial market community, we might have to, for a lot of small customers, we might have to handhold them in terms of that particular understanding, offer them fair and fine and appropriate products, and actually, in a way, safeguard the interest of the overall industry, both on the part of the customers as well as on the part of the BFSI industry. I think banks increasingly will be getting into, to some extent voluntarily, to some extent as a more established norm across the country and across various countries, will eventually be more and more involved in this kind of activities, which we are seeing now. Obviously, a very big area that needs to be addressed and on some kind of a war footing, with rising digital penetration, how exactly we can still safeguard the interest of small borrowers, small customers, as well as ensure that financial fraud, digital frauds, all these things remain under check. So these things are coming under a lot more focus. My sense is that at this moment, these things we are discussing in bits and pieces across various industries, across various countries. But eventually, like 30 years back, 40 years back, the Basel norms and people following it was not so easy to perceive. But eventually that came in. At some point of time, the accounting norms across economies for their national accounting, etc., was not so common to think. But at some point of time, this kind of norms will be much more of a prevalent practice, and I would hazard a guess that we might not have to wait for 25 years, but maybe just 5 years will be enough to have at least the initial templates on a lot of these areas.
Good. Thank you. And I think, like your first part of your deliberation, you concentrated on accelerated speed and speed being of essence. What you are telling is that to risk manage the disruptions brought by speed, we need to standardize more. We need to have a templatization of the best practices so that latecomers can follow it. And of course,
Right.
you mentioned about sustainability. Sustainability, I think Dr. Singh and his foundation is doing some pioneering work on this. Sustainability in the shorter term may look expensive, but for greater societal stability and for sustainability to become practice, we need to do a lot more. Now let me come back to you, Mr. Krishnan. As I have always told in my lectures, people, process, technology, and governance are the four pillars on which things have to work in a synchronized manner. You, as a leader in HR practices, who this, where are you seeing that banks' people requirement? I think we have seen in the last 25 years, suddenly banks becoming managers, tellers, and unions, to banks becoming risk managers, treasury professionals, IT professionals, etc. So where you see the banking personnel or the bankers profile moving in the next 25 years? Mr. Krishnan, please.
Thank you, sir. It's a very good question. In fact, if we look back, those days, the banker will be a general banker, most of them. And today, if we look into those activity, by and large, is being handled through the technology. What we need, again, taking a cue of your question to the earlier speaker, Siddhartha, where you said that if the pace of change is going to be so high, if the car is going to run at such a speed, will there be a proper braking system? Will their body will be capable of handling it? Yes, that applies to the banking also. If you look into the bank has transformed over the period of time and exponentially, which Shekhar was also telling, that the technology has come into the bank in such a way that today the fintechs are playing a major role. Now, when we talk of that, there is a need for the personnel in the banking to understand the risk. There is a need for the personnel in the bank to understand the IT. Why I say is that why we can outsource many of the activities, but we need personnel in the bank to have an understanding of that and also to have an oversight on the outsourced activity. The risk management today is a very, very vital role in the banking industry. Yes, I used to say in many of the podium that the risk management is nothing new. We are managing the risk every day and every moment without knowing that we are breathing. That is the risk management. But is that so simple, vanilla, plain vanilla in today's banking context? My answer is no, definitely not. Because the banking is not today plain vanilla banking, what was happening about 20 years or 25 years back. There are complex products, the market is complex, the market is highly volatile, then there is a need for a good risk management. If there is a need for a good risk management, there is a need for risk professionals in the banks. So also the IT. IT has gone in such a way that the good old days general banker will not be able to understand what it is. The bank has got their own responsibility, particularly to protect the interests of the customers. Today, the cyber risk is the biggest risk. One needs to address that. If that is to be done, then there is a need. Hence, there is a sea change on the HR requirement of the banking personnel today. That is why if you look into today that there are a lot of demand for these professionals. Going forward, what I envisage is that the demand for these professionals will be very high. And there is a need for these professionals to be hired by the banking because there should be a proper risk management, be it the technology risk, be it the IT risk, be it the cyber risk, be it the credit risk, be it the market risk, whatever it is. We need the people. We need the people with the IT background. Without that, it cannot be. The general bankers who are having, by and large, the process. Mahapatra sir was always telling, and today also he was telling about people, process, technology, and governance. True, these are the four major pillars for the bank. Now, when we talk of all these four, the people is the most important one, where it will, which will be present in the rest of the three pillars also. You call it as the process. For the process, there is a need for a people. You call technology, there is a need for the people. You call the governance, there is a need for the people. Hence, the people is very, very important. We need to have a changed vision in particularly the Indian banking, where traditionally we were taking a general banker. Yes, today with the change of time, many banks have changed. So there will be a demand for changed HR. Now the HR, if we again look into Indian banking in general, today still the major portion are with the public sector banks, while there are private sector banks. So there is a need for a paradigm shift in the HR outlook of the banking personnel also. How we can, unless otherwise we have a good HR practices, HR systems in place, the days will be difficult. I'm sure that with the change in the scenario, the banks are equipping themselves and are recruiting a lot of professionals in this field. Going forward, it will be good. Mr. Siddhartha was talking of the Basel Committee, Basel recommendation, other things, which basically talks on the risk management. Again, risk management, understanding the risk management needs. While the technology can be used to a greater extent, I can put in AI for the cyber, whatever it is. Many banks have put in place, but there is a need for the personnel also for that. Hence, there is a need for changed HR perspective in the banking. I am sure that the banks will be tackling it. As was said, this can happen. We need not wait for 25 years. The speed for this will be much higher, and this will happen very shortly.
Thank you, Krishnan Sahab. As usual, you were to the point that the banks are preparing, but the pace of preparation cannot wait for the bureaucratic system of the banks to comply. Probably
Yes.
we'll have to find newer ways to either work around or dismantle the bureaucracies inside the bank for peoples to come up to speed. Now, let me come back to you, Shekhar. What from Mr. Krishnan told and what Siddhartha told, uh, what I am seeing in my own research and my own interaction with various CEOs, that banking will be non-human banking going forward. Probably artificial general intelligence, which is driving an autonomous car today, uh, we will see that a lot of artificial intelligence, which is used sporadically in banking delivery, will probably convert itself to artificial general intelligence. Similarly, probably microservices, containerization, new technologies such as that will also be the default technology rather than loosely talking about mobility and all. Third thing that I'm seeing in my interaction is that cloud will be the default and on-prem will be the more expensive or more unevolved kind of a thing. So which in your experience, which are the customer journeys in 25 years from now will be completely federated? It will not be
I think, did we lose Mr. Mahapatra's?
Yeah.
But I think, Shekhar, you could take the question and continue.
Yeah, I think what I could gauge across from Mr. Mahapatra's part, I think bang on that a few things which we talk now are going to be the new normal. But let us also think of the technologies which are going to be for future. And I guess I will be able to just correlate that part for when I paint 2047. I think digital ethics will become a very important part when we see 20 years plus from here, 20, 25 years, which means building trust, privacy, security on use of technology. You will have Web3, which will be either full-fledged or outdated technology by then or something replaced. But the important part is the distributed ledger to provide transparency and building trust. Quantum computing will be an important aspect which represents information as elements denoted as quantum bits, and that will ensure that you are able to have the entire your AI engine, your data engine, I think, work very well. There will be hyper automation because of that quantum computing, this thing. So whether it is going to combine artificial intelligence, machine learning, the entire, I think, robot process automation, RPAs, and I think all the automation tools. And you will have smart spaces, which is, I think, humans and tech systems, I think, interacting in open, connected and ecosystem. So currently we like touch. I think by 2047, you will have senses coming into picture. You need not touch, you need not express. I guess a few expressions of yours as well as a few thoughts of yours, the way it is moving. I think there will be senses which will be able to pick it up and help you, I think, navigate through that particular process. And when you walk into that autonomous world with drones and robots or AI to perform tasks usually done by humans, I'm called the human normal parts done by humans, you generally are going to be in an immersive experience of virtual reality or virtual augmented this thing. When you paint this part across and see 2047 and the banking and the financial world, and in line with, I think, what we all call as standard technology, the future customer experience is going to be seamless with a zero hop. Irrespective of the customer, you are belonging to the bank, NBFC, fintech, and etc. I think an ecosystem of everything embedded in a daily life is what I think I foresee. It will be supported by technology and involving various stakeholders, interdependent on each other and doing it. You see it in probably mobile where interchangeability happens. You don't know which operator it is when you go to another country, but you still are able to operate and work in a very, very crude sense. But I want to see that part happening in a transaction, so-called, I think, the bank of the future or finance of future. We will have, I think, we'll use all allowed activities, activity trackers, including social media to collect data, to create customer personal and suggest, I think, product sales, which will happen. And it is irrespective of the device, irrespective of the owner of the customer, which will be, I think, it will be accessible through all the devices, mediums, modes, interactions, including, I think, face becoming an important part for us. And if I were to see that part for a customer, generally it is going to be, I think, heavy in transactions, totally. Probably at the end of the day, I think I see an augmented reality to view, I think, day's financial activity rather than something more. And when you are going to have those parts, I think the human beings or the people are going to be the most important assets with respect to services, structures, a few understandings, which technologies still will find it difficult to happen. It can be something to do with health. I think the banks will actually advise on health and activity rather than only money. And I think when they were handling money, it will also, why health? Because I think it is then to the health insurance, then to the life, and because that results into the person's ability to think, make money, and then the manage money. Generally, I think the bank AI, which will make suggestions and various analytics and etc. will be a norm, but for ensuring that it is best interest of the customer rather than making either overcharging customer or be giving a poor advice to customer. Why? Because since it is going to be a simple, transparent way in which the information would be exchanged and would be accessible, the penalties oblique the cost of not adhering to that ethical mode will be much, much higher. So I'm trying to paint 2047 as a transparent, trustworthy ecosystem which is going to have everything else assimilated, collaborated, and working forward. Sorry, Mr. Mahapatra,
Thank you.
I think I lost you in between, but I think I still continue.
No,
because I think
I
got the
lost you.
entire
I think,
sense.
yeah. It makes sense. I think sum up all what we have discussed, in addition to the blinding speed with which change will come in the next 25 years, there'll be a dilemma of idea becoming casualty to the predictive algorithms that artificial intelligence brings. Also, sustainability is going to be a challenge the system has to cope with. People challenges will probably get iterated every 5 years rather than waiting for a 25-year cycle or a 10-year cycle that we have seen. All these are very interesting challenges before the leadership. So, in the format that I have circulated, now we can take a couple of questions from the audience, or we can have an intervening remark from Dr. Singh, and then I will give 1 minute to all of you to wind up your thoughts. After we, in the spirit of customer experience, we take the voice of the customer. Yeah. Anything, if you want to address it to a particular panelist, maybe you can take his or his name, or you can ask it as a general question. Then one of us will take it. Thank you.
There are some questions in the chat box, but can I ask one question? Three of you have been in banking for a very long time. Me and Mr. Krishnan and Mr. Mahapatra have come through a stage when we used to have DFIs, and that stage passed away. And once again, we have come back to the stage where the government is thinking of DFIs, if not directly, but then infrastructure bank. So my thought was the new trend in the world is talking about venture capital. And venture capital is something which is I'm not sure how, as a seasoned commercial banker, would you look at? Would it need a dedicated bank which has the appetite for risk, or would we experiment normal banks to start putting money into venture capital? Secondly, the way NBFCs are emerging, and they're emerging, especially say fintech, though though we speak about companies which have become very large, but I think many of the fintech companies are still searching for funding. So, and fintech companies are so different from assessing commercial viability. Would you think that, like the infrastructure finance institution has come back into the Indian policymakers' mind, um, things, new products, new banks, would they need the policymaker to think in terms of dedicated banks or institutions for them? Thank you.
Thank you. I will try to answer this question. After that, any panelist can chip in. My idea of this is not a cyclical factor that infrastructure funding is coming back firmly on the table. In banks, typically globally, if you see, banks are the incubators of new projects because of their intimacy with the ecosystem as well as with the customer's credit history. After they took it and after they curate it for a while, typically the pension fund ecosystem, the provident fund ecosystem, and the insurance funds, who have long duration money, take it over. But now what you are telling is that when the Indian ecosystem is not prepared for a proper infrastructure funding, because DFI's demise happened because most of the banks not only took these loans, infrastructure loans, despite the risk to their balance sheet asset liability mismatch, they continued with them because in an easy money situation, they were sitting with surplus. They didn't know how to manage that asset liability mismatch. And at the same time, we didn't have the alternate, the insurance appetite and the provident fund appetite for this thing EPFOs were investing only in AAAs. Now you are bringing onto the table something which is definitely a burning thing, but I see this coming, that venture capital, where risk assessment, risk capital, and definitely the regulatory stance today is that only 1 or 2% of the total thing you can invest in a venture capital fund. Whereas if we look at venture capital, the risk appetite has to be very, very high. The appraisal methods have to be very, very high. The secure lending, which is both prevalent in regular commercial lending as well as infrastructure lending, has to be replaced by follow-on funding and exit routes to realize your investments. So those are new things. Those to the Indian banking system will take time to come, but I believe it is time that banks are prepared for this. And I think this writing is clearly on the wall that taking venture capital funding route and uh, concurrent revision of venture capital realization to market mechanism, policy reorientation, as well as allowing banks to tolerate failure of such risk capital. Those have to be there, and it will come in the next 10 years, not 25 years. It will definitely come in the next 10 years. So, is there any question we need to answer? Shall we go for the concluding remarks?
I see a couple of questions in the chat box. If I were to just take over there, I think in finance industry, banks continue to play an important role is what Mr. Shashank has a point, and I foresee, given that the monetary stability of the country still comes and will continue to come from partnership with banks, you will see banks continue to play a very important role. And going further in 2047, I generally feel that the risk management, which is the basic part of banks, only become more important with data being democratized, and one has to take care of the regulatory and the customer side significantly. The second question which I see over here is, what thoughts on brick and mortar branch? I think anybody wants to take it? I think always Mr. Krishnan, would you like to go for it?
Yeah. No, brick and mortar, see, in 2047, what I feel is, as Mahapatra was also making a comment, that banking is required on the bank. So that very clearly indicates that what will be the thought on the brick and mortar branch. Brick and mortar branch may not be required. Yes, they will be required in some places, but by and large, it will be technology driven. So in 2047, that is what I envisage.
So I think concur with Mr. Krishnan that in 2047, customers will come to the branch not to do banking transaction.
Yes.
They'll come to have personal interactions, have a coffee, make a friend, see some parts. And in my mind, the need of the people over there will be for seeing the personal space, because they'll be having too much of technology.
Absolutely right.
It's a personal opinion, but I think
yeah, I agree. I agree with
you. I think I was tempted to say this exactly the same thing, that throughout we are discussing how the industry will be moving on a breakneck speed, how products will be more complicated, etc. One big risk factor is that losing that personal touch completely. I think today, or rather at some point of time, 30 years back, people thought that in case of food grains, so moving to the hybrid food grains is the norm, and nobody thought that at some point of time there will be a premium people will be paying for organic food. Similarly, at some point of time when power loom took over handlooms, so nobody thought that handmade fabric will make such a royal comeback at some point of time. I think in case of a service industry, people will tend to miss at some point of time that personal touch and will be willing to pay some premium for that personal touch. So not for the masses. For the masses, it has to be the cost-effective model. but for a very highly affordable segment, there can actually be a premium segment of very high end. And today we talk about the word hyper personalized in the context of digital transformation. I think that time we'll be talking about hyper personalization in the context of, if I loosely use the term, some kind of a personal touch.
Great. Shekhar, any parting thoughts?
I'll generally say that the world has become more exciting. It's a never normal world, and in the never normal world, you have to be more agile. Risk management will become the most important weapon or a tool for the institutions of the future, because there will be an information and business for everyone, and the way you are able to manage your risks well, and there you are able to take your business calls on that, is the one which will determine your success.
Thank you. Very well said. With this, I think I'm grateful to my co-panelists, as well as on behalf of all of us, the panel members. We thank EGROW and as well as Dr. Charan Singh. Over to you, Dr. Singh, please.
I must thank each one of you to agree to this at a very short notice, I'm aware. And I must thank the chair of the session, Mr. Mahapatra, that despite the commitments, he has accommodated our request to chair the session. Also thankful to the audience who has raised important questions and made it a very participatory and a very rich discussion. I must also mention that this seminar is in continuation of a series that we are doing, keeping in mind the Prime Minister's call of India Vision 2047. Two are already there on our website. Today's discussion will be on our website by tomorrow noon, and you're welcome to use it the way you wish, because many new ideas have come, which I think are important for policymakers and the regulator. We will be, of course, summarizing it and sending it to the concerned authorities, because I thought it has big value addition to the thinking process of banks in days to come. Each one of you have contributed significantly very good thoughts, and I think it will be important for the policymakers to chew upon them. I would also like to make one more announcement. Next week, continuing with our dream of India 2047, we have a special session again, and that will be general approach to reforms in India. Dr. Arvind Virmani, who was the former Chief Economic Advisor of Government of India and Executive Director at the International Monetary Fund, would be delivering the talk on reforms in India, keeping in mind the experience of reforms in the last few years, as well as the need for reforms in the next few years. To discuss those issues, we will have former Deputy Governor of the RBI, Mr. Rakesh Mohan, and the former ED of the IMF, as well as former Chief Economic Advisor of our country, Mr. Rakesh Mohan will be there to discuss the reforms. We are continuing this journey till 13th of August on keeping in mind the Prime Minister's view of India 2047. I would invite all of you to please spare time and come and sit with us and participate in the discussions that we are having on such an important issue. So once again, let me conclude by thanking each one of the panelists, the chair of the session, and the participants for spending time with us today afternoon. Thank you very much.
Thank you, Professor Singh, and thank you, EGROW Foundation. Thank you.
Thank you.